The jubilation and promise of owning a home is something that most Americans aspire to. However, there are several contributing factors. Many home buyers consider before pulling the trigger than ever before. For example, 78% of today's aspiring American home buyer cite factors such as home affordability, personal income, and the amount of down payments, according to a 2024 Bankrate and Yahoo Finance survey. Meanwhile, 74% of today's home buyers use mortgage lenders and rules such as the 28-36 rule to assess their borrowing ability and having a centralized way to determine their financial cost. Meanwhile, a decline in professionals entering the mortgage loan field is also contributing to this decision-making process. According to Investopedia, the number of practicing loan officers has dropped by more than 50% from 2021 to 2023, dropping from 180,000 all the way down to 90,000 respectively. And finally, the Canadian Mortgage and Housing Corporation says approximately 27 to 40% of home buyers in the States today use a mortgage loan officer or a broker. For more than 20 years, my friend Michael Newmann has been providing top-notch customer service and closing home loans in Southern Oregon. Newmann says he's a man of his word and prides himself on going above and beyond the call of duty, as so many of his past business clients and partners can attest to. He takes great pride in educating his clients on loan options while helping them choose the best home loan products tailored to their unique set of circumstances. Newman says that he is relishing the thought that he is in this industry and has the ability to grow his network of friends, business partners, and clients, which have elevated and enhanced the quality of his life along the way. And he joined me this week to talk about mortgage loan options and the proprietary products which set him and his firm apart in this industry. If you're preparing to buy a home or thinking about selling your existing one, this is a conversation with Newman that you can't afford to miss. And lucky for all of us, my conversation with the aforementioned Newman starts right now. I'm Kevin McShann. Let's have this conversation. Michael, if you're ready, my friend, I'll take a moment to welcome you to the program. And I'm super excited to dive into your more than 2 decades in the mortgage loan industry, my friend. It's great to see you, and happy Monday to you, my friend.
Happy Monday.
Happy Monday. Now, Michael, I know that you are a mortgage loan officer helping your clients really understand the multiple products and services that are available to them when they need a mortgage loan officer or they're in the market to buy a house. So I'm curious to start a conversation by asking you about the linkage between affordability and the work that you do as a mortgage loan officer, because affordability is on top of mind for many Americans, my friend. So, what are your thoughts on housing affordability based on the work that you do today, my friend? What are your thoughts there?
Yeah, that's a good question, and that's a hard one because right now it is very difficult. As I'm sitting in a chair here in the southern part of Oregon, um, it has become very expensive, as it is in many places in the nation. So it makes it difficult to get in the game, as they say. So there's lots of different programs out there for first-time home buyers that help them get in. But again, it doesn't necessarily solve the problem of affordability. So I wish I had the magical answer for what the answer is. Seemingly, it seems like it's getting harder and harder for those to get in the game. As time goes by, and it almost feels as though it's by design. So for those of us who are homeowners, it's great. For those of us who aren't, it makes it tough. So I think the any opportunity that people can have to get into the game early, and by any means possible. And so I talk to a lot of kids. I do some education at one local high school in particular, and I talk to them about a concept called house hacking. And house hacking is not as horrible as it sounds. It's just getting into a home, and maybe with the use of a co-signer like mom and dad or even grandma and grandpa, to help you get in, and renting your rooms to friends, and offsetting that mortgage payment. And that is a really, really wise way to get, an easier way to get into the game of home ownership. And once you're in, it makes it a lot easier as you go. But that's one of the solutions that I've tried to lean into.
Yeah, and Michael, with more than 20 years as a mortgage loan officer, I'm curious, how do you think people should look at, the psychology of buying a house? Because I know that you take a sports mindset to the work that you do today, and as a former sports reporter, that warms my heart, my friend. So talk to me about the psychology of your job and why it's important to take that sort of sports or competitive mindset to the work that you do today.
Oh gosh, that's a multifaceted question, that's for sure. I'll start with just kind of the psychology of money, in general, which obviously I'm handling the biggest financial decision most people ever make in their life, with a home loan, a mortgage. And so it's fascinating. A lot of the good book talks a lot about money. And there's a reason for that. It can be a big stumbling block for people, for the better, for the worse. So it's really fascinating as I get into mortgage counseling with people, as I do, and talking with them about their finances, how much their mind gets in the way. For instance, budget. A lot of people have in their mind certain price points of houses, and those are very psychological. So, for instance, $500,000 might be a psychological barrier for somebody, and it doesn't have any root in any practicality. A lot of times, as I unpack it for them, in other words, $500,000 to some and most might sound like a lot of money, and it is, but is it relevant to their budget? And so it's a matter of breaking down and making sure I get behind their eyes in regards to why is a $500,000, or maybe it's $1 million, whatever it is for that particular person. Why is it that price point is a hang up? And getting behind their eyes, talking to them about, truly their finances, the black and white, the budgeting, the bills, all those things, and encouraging them to go through that practice themselves, which most, unfortunately, Americans don't, and we're just not taught it. And so, very simply going through that and then coming to the decision on what price point is affordable for them. That practice has been really good, and it's been very eye-opening to see, even for myself, how much we let maybe our upbringing or the people around us tell us what we can and can't do, and especially when it comes to our finances. So that's kind of the first part of the equation. As far as the competitive and sports nature of things, my background was collegiate baseball. I was a baseball player once upon a time. And so everything I do, I run through the filter of team sports, athletics, performance enhancement, team cohesion, all that kind of stuff that I learned along the way. And I bring it to the table every day. It's helped me be a top producer, my competitive nature. And again, as a baseball guy, we pay attention to numbers. We count everything, right? Statistics are what we're all about. So it fit nicely, and it's been something that I use a lot, because I'm not trying to sell anything. I'm educating and coaching people. I'm their guide, and so that's kind of the approach that I've taken, and it's fit nicely with my background.
Yeah, absolutely. And I know, Michael, that you're licensed across multiple states, and you oversee the Medford branch of the CMG Home Loan Company, and you guide your high-profile clients through seamless and sophisticated financial journeys, my friend. So tell me about your work, my friend, and what you like most about working with such a diverse group of clients and people, my friend. What are your thoughts there?
Yeah, I've been fortunate. I made a move, it's coming up on a year now, to CMG Home Loans, and I was with another company for pretty much the entirety of my career. And so, I've worked with all kinds of clients. I've always had a wide array of products to be able to offer my clients, but I found myself over time, as a top producer, and learning what I really enjoy and what fills up my heart, and that is really the puzzle and strategizing, and leaving my clients better than when they started with me. And so my true desire is to impact my clients in a way, financially and personally, that really changes their life. And so it fit nicely when I made this move, because as I dug into proprietary product that CMG Home Loans has, I was able to learn about this product called the All-in-One that's become my passion. And the All-in-One is a loan that truly allows me to step into their life. It allows me to plan with them, to dream with them, to goal set with them, and it fits so nicely into where I was at with my career. And now I have a product that's truly changing their financial trajectory. Again, not for everybody, but for those that it fits, it's been an absolute game changer.
Yeah, absolutely. Michael, I'm curious to ask you about the psychology of, prosperity as homeowners, and how the societal landscape has sort of shifted. And I'm curious, do you think home ownership is becoming an increasingly less sort of attainable goal for people, because they may have the desire to own a home, but not necessarily the means? So do you think home ownership is becoming less attainable? And if you believe that, I'm wondering your thoughts on how we can open the door of both opportunity and empathy for people that want to start and ultimately attain a path of home ownership. What are your thoughts there, my friend?
Yeah. Again, it is getting more difficult and more difficult. And I think lenders are trying and investors are trying to bridge the gap for people to be able to get into home ownership. A lot of people don't realize that the FHA 30-year fixed mortgage came out in the 1930s. FDR rolled that out after the Great Depression to help people get into home ownership. There hasn't been a lot of ingenuity since then. To be honest, there really hasn't been an evolution of the payback terms or anything else. So I think it's time that the industry starts to embrace that, and we're starting to see that some different models. For instance, we offer a program called Home Fund It, where people can actually raise funds for their down payment. In other words, it's like a GoFundMe for a down payment, and it's completely again, it's proprietary through CMG Home Loans, but it's a program that allows people to go out to anybody, and they can gift them money towards their down payment, and that's not normal. Usually, that is not allowable by agency guidelines. Fannie, Freddie, they don't allow that, and we've come together with them and developed this program where it is allowable. And so, furthermore, there's a component of that called Up It, where we've partnered with about 500 different corporations and growing, big ones like Target and Walmart. And these young people, it doesn't even have to be a young person; it could be anybody, can go and they get their own web page that we give to them. It doesn't cost them anything. And they're able to go to, say, a family member, and say that family member shops online at Walmart all the time and they have their groceries delivered. So they could ask that, say it's grandma. They could go to grandma and say, hey, grandma, instead of going straight to Walmart, will you go through my Up It page, my Home Fund It page, and go to Walmart through there? And the only reason for that is then it recognizes, and then Walmart gives they give back a percentage, match it, to go towards their down payment. So a lot of corporations are doing this. We will match up to $2,000. So it just helps people kind of get in the game, because again, I think one of the most difficult things is saving for a down payment. And a lot of people think you need 20%, which is not true. A lot of people are getting in first-time home buyers for 3 to 5% down. So they're able to raise those funds through the Home Fund It program. The other thing that I kind of think, when you think about the psychology and like where things have been, I wonder, with this type of a program, I've thought, why don't corporations and companies start to offer down payment assistance for their employees rather than rather than a 401k or an option, not to go away from 401k or investing, because we all know we need to plan for our future. But we're talking about an issue of home ownership and having a hard time getting into home ownership. So, and we all know that becomes the biggest asset most of us ever have in our life. So why don't employers start helping with a down payment for these young people instead, and as a alternative, not replacement, but an alternative to a 401k, when they're early on, to get them in the game? I feel like that would be a very sticky retention, really nice retention strategy for employers to help. So the bottom line is, Kevin, I think we need to, as a whole, we need to, the industry needs to step up our game and reinvent some things and start providing more opportunities for people that want to get into home ownership. Sorry, that was long-winded.
But it was extensive, so I appreciate that. And Michael, I'm also curious to ask you about clarity, communication, and motivation, because we talked earlier about the psychology of the work you do, but I whatever field you're in professionally, I think clarity, motivation, and communication are the keys to success. And I know that you believe that as well. So I'm wondering why that's important to you in the context of the work that you do.
Yeah, I think, I mean, communication is everything, and I think especially as quote unquote sales people in my line of work, I think, and I find myself guilty of this at times. Part of communication is not just speaking; it's listening. It's listening to our clients. It's listening to our needs and allowing them to voice what their concerns are, what their nervousness is, what their desires are, and that's probably more important than talking at them. And I think we're guilty. And when I say we, I mean as an industry, we're guilty of our communication being one way instead of really, really listening to people and meeting them where it is that they're at in their journey financially, especially when it comes to this biggest financial decision we make with a home loan, a mortgage, buying real estate. And let's be honest, that's the one thing that holds us back from retirement. It's the one thing that holds us back from financial freedom often is this housing payment, if you will. And so how do we solve for that and helping guide people through that? So communication is extremely important, and it's not a one way street for sure.
Just the importance of taking a strategic mindset in life to help us sort of inform the decisions that we make from a financial perspective. Why do you think
absolutely
being strategic is important?
Yeah, well, I think once upon a time it was somebody said to me, if you don't plan your life, it gets planned for you, right? So I find it funny how most of us will, we spend all this time researching vacation spots or researching a car we want to buy or whatever it is. We spend all this time planning, right? But yet when it comes to our life, we're shocked when it doesn't go quite the way we wanted it to go. And I think it's important that we plan. We plan our life. And so I was fortunate early on to get aligned with a coaching company, Building Champions, and they have a life plan. And so it was pretty daunting. You sit down and you literally write out a plan for your life, and you have different categories, personal, professional, financial, spiritual, all these different categories. And it goes into so much detail that you get down to how do you want to be remembered. And ultimately, and this was the really hard part, is you wrote a eulogy. If you were to be gone, what would people say about you? And so it really was intentional practice, and it was a full day of work and a lot of quiet time of really planning out, what do you want life to look like? What do you want this thing to look like? And being very detailed about it and intentional. And that's been very, number one, eye-opening and very, very valuable. And I think we don't spend enough time. We react. We get very reactionary in life, and instead of being proactive and making a plan. And yeah, you're going to get thrown curveballs, right? we're going to get the unforeseen things that happen, but it feels like you're able to navigate those things so much better when you have a plan and a plan for success.
Yeah, absolutely. No, Michael, just out of a personal curiosity, and I'm interested to get your answer here. So, Michael, I was born with disability, as you know, listening to my podcast, and I advocate for the full inclusion of folks with disabilities from an employment perspective as a speaker. And I'm curious, the lens of home ownership, how do you think we can create more avenues, both from a financial and societal perspective, for folks with disabilities to be independent financially and ultimately be placed on the path of home ownership, my friend. What are your thoughts there?
Yeah, yeah, that's a good one. I think that as a whole in our society, we need to be better. I have a son that has has some disability, if you will, in regards to his social and interaction and just being on the autistic spectrum. And I find that it's so important that we don't count. I mean, look at the drive that you have. I mean, I've watched videos and different things, and it's so important that we don't limit people based upon a disability. God allows us all to have a different path, and I found there's more talent in different ways. Like my son's, he's a genius. I mean, he is but socially very awkward, and he's very direct, which is often offensive, right, to people. And so kids like that are counted out, and then people in your position that it's more you can more visually see a disability situation with people, and then we feel people are so quick to think that that's going to make it to where they shouldn't be able to they're not going to be able to do as much, or not going to be able to be valuable of an asset, and we sell that short. So I think we got to open our minds and our hearts a little bit more there. So as far as mortgage is concerned, I think investors, again, as a whole, we need to find avenues, as we do for other areas that we've found over time that it has need, to help facilitate, whether it's down payment assistance programs specifically for those with disability, or whatever it is, it needs to be advocated for. And what better, person like yourself that has a platform to try to, lobby for these type of, programs, and investors to embrace that.
Yep. Yeah, absolutely. And, Michael, I want to go back to the all-in-one loan program that you talked about earlier, because you believe that for high-level business owners, or those that may be going into businesses, it can really reduce the interest cost and keep the equity rather accessible in their business. So tell me why the all-in-one program is good for high leverage and high ticket business owners, my friend.
Yeah. Yeah, it's wild. So it is a program that has evolved the way we repay a mortgage, and so it's not just the high income earners. It's just, I would say, highly disciplined, meaning they have a decent amount of money that's discretionary, and discretionary with the meaning of being able to make a choice on where that money is going to go. Okay, it's not already accounted for. So a certain amount of money. So the all-in-one literally allows you to pay your money or pay your mortgage off, in less than half the time, and a lot of times a fraction of the time of a 30-year mortgage. So it's the only principally first paid mortgage, and it's a mortgage that is allowing your static money that sits in we all have money that sits in our checking account while we're waiting to deploy it into bills. It puts that money to work for us. And so it does that. It's by a checking account that's fully integrated with the line of credit. So the moment we deposit funds into this checking account, it immediately reduces the principal on the mortgage. And the magical part about that is it calculates interest that night at 9 p.m. and then sweeps away to the next day. So it's individual calculations based upon a balance, and then 30 days of those individual calculations are added up, and that becomes our interest-only payment. And so we're literally controlling something that we've never controlled before. By the way, as we're paying down our principal, as we are aggressively in this scenario, we have not locked up any of that money, and that's the kicker. They say on average, 4% of Americans are consistently paying down their principal each month, 4%. And I think the reason for that is, at least it was for me, is if I put extra principal down on a regular mortgage, where does that money go? It's gone. It's locked up. The only way I can get access back to that is if I sell my home. And in the all-in-one reverses that. So it is actually 100% accessible. Those funds are. And so it changes the dynamics. So there's two different types of people that love this. One is you just want to pay, you want to drive to zero. You want to pay your mortgage off quickly. This is going to expedite that because it's putting your money to work for you, okay, in the mortgage and saving in a daily interest calculation versus the moment we sign on a mortgage, our fate is set, our payment is set. It's front loaded with interest and all the things that most of us know, just haven't known an alternative to that. So this changes that dynamic. So one, people that want to pay off their mortgage early. Two, people that like to leverage their equity. In other words, like myself, I like to be able to have access to my equity so that I can in turn maybe put it on the next property that I want to purchase as an investment. So able to tap into that equity, or maybe it's just as simple as people want to be able to put their kids through school or help with mom and dad in a care facility or whatever it may be. I'm the one who gets the calls asking for access to their funds. Hey, Mike, I need to remodel a kitchen. I need to put a kid through school. I need to, whatever it may be, they're trying to gain access to this big asset we all, us homeowners have, yet they've got to get another loan to do that. And the all-in-one changes that. You don't have to get another loan to do that. It's built right inside that platform.
Yeah, and Michael, I'm also curious to get your thoughts on the importance of embracing the concept of building wealth through borrowing, my friend, and why lenders have to change their perspective rather than just that of the buyer, my friend. What are your thoughts there?
Yeah, so I mean, leveraging is something that is something that I've embraced for sure, and is been able to allow me to acquire more real estate than I would have otherwise. With real estate, you've got an appreciating asset, meaning it's gaining in value as time goes by, and having access to that value to be able to pull against that without selling that asset and be able to then put it into another asset that's also appreciating, and all the tax benefits and everything it's a wild concept that is been very successful. And so it just kind of depends on the type of person. But for me, leveraging against my properties and equity has allowed me to expand my portfolio much bigger than I ever would have been able to by just merely saving money. The average person, is not able to save money at a really fast pace enough to be able to put into another property. However, your appreciation and your value of a home, that compounds really fast, and having access to that is a much quicker way to be able to acquire that next asset, rental, investment property, second home, whatever it may be. So leveraging is huge. And again, you're not leveraging to go buy some non-appreciating asset like a boat or something. You're leveraging against to acquire another asset that hopefully is creating cash flow that's helping feed into your financial situation.
Yeah, and Mike, I'm also curious to ask you about, the emotional biases that come through borrowing, my friend, and so, things such as, fear and, the desire to be safe, when we talk about safe mortgages or making an emotional decision because it's safe. I'm curious to get your thoughts on the mindset of emotional biases and how it affects our financial decisions. What are your thoughts there?
Yeah, no, that's a big one that taps into the psychology piece of this, and again, talking about money and how psychological it can be. A lot of the way we're raised affects that, and other things, traumatic financial events that we've been through. In my 20-year career, again, I went through the 2008 and 2009, kind of the meltdown that happened financially, and which was a direct correlation with real estate. And so there's a lot of scars that people have through that time it's debilitating. And so people are scared of certain terms that are used, such as adjustable rate mortgage. That seems to be a bad word. There's all kinds of fear around the what if, and it holds people back from making decisions that could advance them. Instead of really looking at the reality and the facts around things, they get focused on the trauma that maybe they went through. And I was guilty of it myself. It's hard not to when we go through things that are hurtful and caused pain. The other thing that I think is really fascinating that nobody's talking about right now, I don't think, is what's being known as the golden handcuffs, and that is people that are in mortgages that they got about 4 years ago that are 3%. And so, statistics that have been made aware of, the average American with a mortgage right now is 54 years old. 54 years old. And then it gets worse. The average amount of time left on those mortgages is 26 years, which makes a lot of sense if you think about when rates were really low 4 years ago, when we got all these, really low interest rates, 3%. So you've got people that are never going to be out of debt. So that's a problem.
It's a cycle for sure, and you talk about not being out of debt, and I know we talked about home affordability earlier, but I'm specifically interested to get your thoughts on this. The Fortune magazine, they published an article earlier this year that said nearly half of American households can't afford a medium priced home today. Between the estimates are between 50 and 77% of today's American can't afford a median priced house, and that lists things like home affordability that we talked about. But they also list mortgage rates as one of the reasons why. And I'm curious to get your thoughts on those findings, and if anything surprises you at all, my friend.
It doesn't surprise me because I've been living it for the last 3 years. As rates have been higher, it's definitely affected the reality of, prices in conjunction with interest rates have changed people's ability to buy 100%. I mean, it's definitely changed. But I will also say that we were spoiled in a way during those really low interest rates that got a lot of people feeling like that was their entitlement to home ownership, that it should be that low. The rate should be that low. And a lot of people, at least that I work with, don't really think about the reality of rates being, let's just use the 3% as an example. Well, I don't know about you, but I don't think most people would jump out of their shoes at a 3% rate of return on an investment, right? So if we put ourselves in the investors' shoes, the people that are lending the hundreds of thousands of dollars to people to purchase a home, you think they're excited about a 3% rate of return. Furthermore, is that even realistic? Because they're paying me, they're paying the mortgage companies and everything else. So at the end of the day, how much are the investors were they really making when the rates were at 3%? So, but we all got used to them, and they were real, and they helped people get in. So there's a lot of really great things, but it also set an expectation that is really making it hard to swallow where things are at now. And yeah, the one thing with traditional mortgage that sets the tone for us is that rate. It's the first question people ask: what's your interest rate? Because they feel that that's the only thing that can control the fate of their future in a mortgage. And in a lot of respects, they are. That is accurate. But in regards to, as I spoke about the all-in-one home loan, again, is that first-time home buyer going to get the all-in-one home loan? Nope, they're not going to. That's not the function of it. However, it is the function of folks that have been in for a bit and have the ability to pay extra on their mortgage, and so that mortgage is making a heck of a lot of sense in helping people get into the game and leverage and do the things, because it no longer is just about an interest rate anymore. It's about a calculation, and the interest is just a component of a daily calculation that they're driving. So I'm kind of bouncing around on answering your question, but in regards to just the problem, it almost feels like it's by design a little bit. I hate to say that, but this difficulty in qualifying and the pricing getting more and more difficult for people, the average American, to get in. I don't know what the solution to that is. I don't know what the answer is, but it almost feels a little bit by design. Again, it's the American dream is to own a home, and hopefully always is, and we should be striving for it. But it is definitely getting harder and harder for the average person to get in the game.
Yeah, I've got a few questions left for you, Michael. And the first of those, I want you to rely on your sports background, my friend, because you say there are similarities between high sports performance and mortgage and leadership, my friend. So how do you think the intersection of sports can sort of influence the world of high performance, mortgage, and leadership? What are your thoughts there, my friend?
Yeah, I mean, I think it's I've said many times that I've very rarely do I run across, and I can't even think of somebody that has been a high level collegiate athlete or professional athlete that hasn't achieved some form of success. And I don't think that's by mistake. I think that whether it's mortgage or whatever space it's in, I think very few of us have the fortune of making it to the tippity top on the athletic spectrum, whether it's baseball in the major leagues or basketball in the NBA and so on and so forth. But there's many of us that achieve great success outside that because of the disciplines that we learned through that process. So for me, can I tell you that my college degree wrote my ticket, and I immediately was making great money out of college because of my UC Davis highest honors degree? No, I floundered actually. But what I can tell you is the reason why one of the many reasons why I've been able to achieve some sort of worldly success is because of the disciplines that I learned. To be a collegiate athlete, you have to manage your time. You've got to figure out how to get sleep, how to eat appropriately, how to study, how to find time to study, practice, lift weights. If you're not as fortunate as others, you might even have to work in the off season. And you have to manage a crazy schedule. These collegiate athletes are managing a crazy schedule, and you can't do that and sustain that without developing tools to be able to achieve. And some of those tools are things like how to develop a relationship with a professor, okay, because you need help, because you're not able to be at every class, and you need a little bit of extra guidance. And so how do you develop and make yourself, instead of just being a jock, okay, a person that doesn't take school seriously or whatever? How do you change that dynamic with that professor and get them to know you as an academic, a student, versus just an athlete, somebody that's really trying. And so that development of that relationship, there's so many things that we have to develop. And because of those things, they're the conduit and foundation of success in whatever, endeavor that people end up in. I think it's an antidote for success. In order to really thrive in those situations, you've got to learn so many skills.
Yeah, absolutely. Michael, I'm going to combine my next two questions because they're interconnected and related, my friend. With 20 years of experience in various forms of leadership, my friend, I'm curious to ask you about what you believe makes an effective leader in a professional setting, both in business, work, and life, my friend. And secondarily, I'm curious, how do you want your work and your life legacy to be defined? You can take that question in any direction you like, my friend.
Yeah, super good. I think a leader, for me, is one that's transparent, that doesn't put themselves before his or her people, and makes them feel important, and is just very transparent and quick to apologize, because we're all humans, and just because you're in a leadership or a higher level role doesn't mean that you don't make mistakes. And I think it's almost important that you do make mistakes, and when you do make those mistakes, you recognize those and you apologize for those, and you be humble. So I think people want to get on board. I mean, look at the coach of the Dodgers. I mean, how does he have that kind of buy-in? Look at the culture, or the Blue Jays, for that matter, in the World Series that we just watched. That was epic. It was one of the best World Series probably ever, arguably. And you've got two leaders with both of those teams that have been, and coaches that have been able to create cultures of absolute buy-in. Those guys would run through 50 walls for those coaches, and they're humble. Those coaches are humble. They're transparent. They take accountability when the team falls, and that's huge. And that's why you got guys like George Springer for the Blue Jays. He's hurt. Anybody who's swung a bat that knows what happens when you have a strain like he had in his, I think it was his oblique or whatever, rib cage. That's game over. Like you're not coming back anytime soon and swinging a bat at a high level. And look at what that guy did. Why did he do that? Like he was bought in, and that starts with leadership. So anyway, so hopefully that kind of answers that. I think you know, a transparent leader, a humble leader is somebody that gets a following. How do I want to be remembered, and kind of my legacy, I think, was your second part, and that's just somebody who, I just want to be remembered as somebody who gave back, you know, and breathed into the people and made a difference with the people around me, whether, you know, no matter what, no matter whether it's somebody that I could benefit from, you know, financially, or just a relationship. I want people to walk away from knowing me better than when they started. Not much like you, Kevin. You watch some of the things, you know, some of the stuff that I've watched on you, and you impact every single person in the room, from what I understand. When you come into, or you acknowledge all of them, and that is that's something that is very admirable, and I wish more people did. You're making a difference in noticing people, and you don't have to do that. So I just want to make a difference, you know, little or big.
Yeah, absolutely. And you know, my final question for you is, if people want to get connected with you, my friend, what's the best way they can do that?
Yeah, thank you. So yeah, I can be reached online. You can Google me, Michael Newmann, and that's Newman with two N's, Newmann. My team is called the Newman Group. I work for CMG Home Loans. You can find, again, my website, newmangroup.com. My number is 541-227-2727. And also can email me at newmangroup@cmghomeloans.com. And yeah, I would love to connect with anybody that's interested.
Well, Mike, we covered a lot of ground, and I want to thank you for your kind words about my commitment to dispensing information, and all of the information that you shared with me in the home mortgage loan industry, and for engaging it in a thoughtful and hopefully informative conversation. Your time on my behalf is most appreciated, and I want to thank you for being here this morning to engage in conversation. It's most appreciated.
Yeah. Well, thank you so much for having me, Kevin. It's great to meet you. Keep doing what you're doing. And yeah, if I can ever be of assistance, please don't hesitate. Love what you're doing and what you're about.